The effective average tax rate for the wealthiest in the UK is estimated to be just under 30%. That's 17% lower than the highest marginal income tax rate. This is down to how various forms of income are taxed. Calls for wealth tax have been growing in recent years in an attempt to bridge this gap, but would it actually work in practice? In this video, I'm going to break down the pros and cons, and then I'll give my opinion at the end. Starting with the pros, a wealth tax could reduce income and wealth inequality. The richest in society generally have a lower average tax rate. This is down to how they store their wealth and how they extract their income. If you have a large amount of assets, generally you're going to be paying capital gains tax when you come to realize any gains on that asset, as opposed to earning money through employment where you're going to be paying income tax. If you have a large portfolio of assets such as property and companies, you can also use that as collateral to take loans out against those assets. So you can take those to the bank, use that as collateral, and actually take loans out against those assets. And then you're not having to realize any income or extract any income from those assets, which would then be a taxable event. So a wealth tax would bridge this gap because it's then looking to tax wealth rather than taxing income. If you have a society where the richest are continually getting richer and you have a smaller and smaller percentage of people owning more and more wealth, that's never good for economy. And it's also not good for equality of opportunity. It could also be a big potential revenue earner for the government. It's estimated there's around 22,000 people that have assets over £10 million in the UK. Wealth taxes can be progressive and have varying rates, but say for example you have a 1% wealth tax on any wealth over £10 million. That would generate around £10 billion for the government. That could then be used to fund much needed public services or potentially reduce the tax for those lower earners. It could also promote an efficient reallocation of wealth. In order to reduce their tax burden, the most wealthiest in society could look to move their money away from low-yielding assets such as government bonds or holding money in a bank account. They could instead look to invest in high-yielding assets such as investing in the stock market or startups. This could be great for economic growth. It's stimulating the economy, so it's allowing those companies to grow, which in turn could help with employment. And it's not just the revenue they get from the wealth tax, it's also then increased revenue such as corporation tax and VAT if people are starting to spend more in the economy. Now let's talk about the downsides. With a wealth tax, there's a very fine balance, and if it's set too high, it could actually discourage investment and income-generating activity. There's also a risk and a possibility that people could leave the country. If those taxes are too high, people might decide it's not worth staying in the country, and they might decide to move to another country where there's a lower tax burden. People will also likely find loopholes. Just like any tax, there's always going to be ways to avoid it, and they of course can afford accountants to help them do this. There's then of course the admin challenges. It'd be very complicated to implement. Things such as valuations, collection method, exemptions, how do you extract cash from those assets? It would need to be extremely detailed in order to cover all of that. And the final point is, who would actually end up paying the tax in the long run? For example, say you have a lot of property. If your tax burden is increasing, would you pay that yourself or would you pass that on to the consumer, i.e. the renter? So actually by implementing a wealth tax, would that generally just increase the rental market, which then would actually have an adverse effect? You're actually making that inequality even worse. So to summarize that and to give my opinion as well, I think in theory, most people can agree that a wealth tax could be a good idea, but we also know that it'd be extremely complicated to implement. A lot would depend on the rate, a lot would depend on the types of assets chosen. There would of course need to be exemptions and how you're going to enforce it as well. I do also believe that the point around people might leave the country if the wealth tax is too high is not actually a big as concern as some people might think. For example, if you hold a lot of your wealth in property, that property is always going to be there. So even if you want to sell it and move, someone else has to buy that in order for you to move. So that tax is always going to be on that physical asset. There's also the point around society, family and friends. People are living in the UK for a reason. They're not doing it because it's a tax haven. If they wanted to really reduce their tax, they were living elsewhere. They're doing it because that's where their family's based, that's where their friends are, and that's where they've grown up. I know a lot of people always say that, the wealthiest can just pick up their life and move elsewhere because the costs are not really a thing for them. But for me, it's not always about the money. They're here for other reasons other than financial. The term wealth tax as well is a very vague term. We actually already have forms of wealth tax if you think about it. Capital gains tax, inheritance tax, stamp duty. All forms of taxing wealth and increasing asset prices. So rather than looking to introduce a new wealth tax, is it more worthwhile looking to reform the taxes we already have rather than add another layer of complexity and more confusion and end up with more debates that usually end up with all sides unhappy? A big one for me would be reforming council tax. With wealth tax, if you had that on property, one of the ideas is that you could do that through council tax. But the way council tax is measured is so backwards. It was based on someone driving past your house in 1991, and those valuations are still used today. So depending on the area of the country that you live in, you could have a house that's 10 times the value of another house and potentially be paying less in council tax. Another reform could be around national insurance as well. So this is generally paid on employment income. Whereas if you have, say, rental income from properties, it's generally not classed as earned income. It's generally classed as investment income and therefore doesn't attract national insurance. I've said this for a long time that income tax and national insurance is so overcomplicated of what it needs to be. National insurance is essentially just an extra income tax. We make it so complicated. We then fall into the trap of earners paying through PAYE end up paying more in income taxes in general than people having assets, not only because capital gains tax is generally lower than income tax, but also because of the added point around national insurance. And finally, my concern would be, are governments actually that supportive of it? Their main concern is staying in power. They want the most powerful in society to back them. So would actually implementing a wealth tax, would that be good for them? As much as we might like to hope that they act in the best interest of the ordinary person, they are going to be influenced by the most powerful in society. It'll be interesting to see what happens over the next few years. My bet would be that this is not going to be implemented, but it could encourage discussions around reforming other types of tax. Let me know your thoughts in the comments below. I hope you found that useful. Drop it a like if you enjoyed it, subscribe if you're new, and I will catch you in the next one.